It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. The late Charlie Munger built a $2.3 billion fortune without complicated strategies or insider information. His formula? Buy great businesses and hold them forever. Today, I'm revealing the 8 dividend stocks the late Munger considered worthy of permanent positions in his portfolio. Companies so exceptional, he once said about one of them, "I'm never going to sell a share." In this video, I'm breaking down Charlie Munger's 8 favorite dividend stocks, the exact companies this billionaire investor believed were worth buying and holding forever. If you're tired of chasing market trends and ready to build wealth the Munger's way, please consider liking this video. It really helps more people find these life-changing insights. And make sure you stay until the end for our bonus tip section, where I'll share Munger's most powerful dividend advice that most financial YouTubers completely miss. Let me ask you something that might sound strange. Would you rather own a stock that pays a 7% dividend but never grows? Or one that pays just 2% but doubles that payment every few years? Most investors automatically choose the higher yield, and that's exactly why they fail to build serious wealth. Charlie Munger, who passed away in 2023 at age 99, didn't just talk about long-term investing, he lived it. He served on the board for over 25 years for one of these companies and held over $100 million in shares until his death. The big money is not in the buying and selling, but in the waiting, the late, great Munger explained. These 8 dividend stocks weren't random picks that caught Munger's attention for a quarter or two. They represent businesses so fundamentally sound that Munger was willing to bet millions on their continued success, not just for years, but for decades. Stock number 8, Wells Fargo. I think I'm a little more lenient. I expect less out of bankers than Buffett does. This quote reveals an interesting split between Munger and his longtime partner, Warren Buffett, when it came to Wells Fargo. While Berkshire Hathaway slashed its Wells Fargo position following the 2016 cross-selling scandal, Charlie Munger's Daily Journal Corporation kept holding, making it his biggest position worth $65 million. What did Munger see that others missed? 2 things: tax considerations and a deeper understanding of banking realities. Munger explained that banks are inherently difficult businesses to run. The pressure for short-term earnings often clouds executives' judgment and impacts their long-term strategic vision. When Wells Fargo's fake account scandal broke in 2016, Munger didn't rush for the exits like most investors. Instead, he chalked the mistakes up to a big error of judgment by old management rather than an irreparable breakdown in company culture. This patient approach paid off handsomely. Shares in Wells Fargo nearly doubled after Munger made those remarks, proving once again that knee-jerk selling during crisis moments usually costs investors dearly. With a current dividend yield of 2.47% and a quarterly payout of 40 cents per share, Wells Fargo continues to reward shareholders who followed Munger's lead and held through the turmoil. Stock number 7, Procter Gamble. When markets crash and uncertainty reigns, there's one category of products people never stop buying: household essentials. This fundamental reality is what drew Munger to Procter & Gamble, the consumer goods giant behind products people use daily, regardless of economic conditions. While Munger didn't speak extensively about P&G specifically, his investment philosophy aligned perfectly with what P&G offers: consistent growth, strong brands, and most importantly, dividend reliability. P&G is a king when it comes to dividends, with 70 consecutive years of dividend increases. The company currently offers an annual dividend of $4.22 per share with a yield of 2.47%. Munger often emphasized investing in businesses with strong brands and competitive advantages, exactly what P&G has built over its 180-plus-year history. Stock number 6, Chevron Corporation. While Munger didn't publicly comment specifically on Chevron, his influence was evident in Berkshire Hathaway's acquisition of approximately 8.16% of the company's outstanding shares, making it one of Chevron's largest shareholders. Why such confidence in an oil company when many investors were fleeing the energy sector? Because Munger and Buffett understood something fundamental about companies like Chevron. They're built to weather any storm. When oil prices fall, refining margins often improve. When oil prices rise, production becomes more profitable. Chevron's most impressive feature is its rock-solid balance sheet, boasting one of the lowest debt-to-equity ratios in the industry at just 0.15. This financial strength enables the company to keep investing in operations and distributing dividends even when oil prices plummet. And those dividends are extraordinary. Chevron has increased its dividend for an impressive 37 consecutive years, a remarkable achievement in such a volatile industry. With a current annual yield of 5.08% and a quarterly dividend amount of $1.71, Chevron offers one of the most attractive income streams on this list. Stock number 5, Johnson & Johnson. The best businesses are built to last, not built to grow. Johnson & Johnson is one of only 2 companies with a AAA bond rating, higher than the U.S. government. Its fortress balance sheet features just $13.5 billion in net debt against a market cap of $380 billion, with $20 billion in annual free cash flow easily covering its $11.8 billion dividend obligation. The company recently increased its dividend by 4.8%, extending its growth streak to 63 years and maintaining its status as a dividend king. With a current yield of 3.3%, J&J offers one of the healthiest and most reliable dividends in the world. Stock number 4, Bank of America. Munger was critical of most financial institutions but believed some were exceptional. Bank of America was at the top of his list. As Daily Journal's largest holding, Bank of America clearly earned Munger's highest confidence. In early 2009, during the depths of the financial crisis, Munger made an extraordinary move that separated him from the crowd. While panic swept through markets and bank stocks were being dumped indiscriminately, he quietly funneled 71% of Daily Journal Corporation's cash into suffering financial institutions, particularly Bank of America. The results were spectacular. By 2013, those investments had tripled in value, dramatically boosting the company's worth. With a quarterly dividend of 26 cents per share and a yield of 2.89%, Bank of America has raised its dividend for 11 consecutive years while maintaining a 27-year track record of regular payouts. Munger's initial acquisition of 2.3 million shares for $44.3 million has grown spectacularly despite BAC falling 38.9% from its 2022 high. For Munger, Bank of America represented the ideal combination: a high-quality business available at a reasonable price. Stock number 3, BYD. I would say that I've never helped do anything at Berkshire that was as good as BYD, and I only did it once. This extraordinary praise from Charlie Munger reveals just how strongly he believed in Chinese electric vehicle manufacturer BYD. What made Munger so enthusiastic about this Chinese company? His bullishness came primarily from his focus on China as an emerging investment hub and his admiration for BYD's founder, Wang Chuanfu. Munger even directly compared BYD to Tesla, stating, "BYD is so much ahead of Tesla in China, it's almost ridiculous." In 2008, Berkshire invested $230 million in BYD, acquiring 10% of its shares. By 2022, that investment had grown to around $8 to $9 billion, a return of tens of times the initial investment. Recent results validate Munger's confidence. In 2024, BYD reported $107 billion in revenue, surpassing Tesla's $97.7 billion. The company has become China's largest private sector employer, with over 900,000 employees, including more than 104,000 in research and development. Analysts forecast earnings and revenue growth of 15% and 13% per year, respectively, with earnings per share expected to rise 15% annually. Stock number 2, Costco. I love everything about Costco. I'm never going to sell a share. Charlie Munger wasn't just a Costco investor, he was a true believer. Since January 1997, he served as a director of the warehouse retailer and accumulated shares worth more than $100 million by 2023. Late Munger once called himself a total addict of the store, reflecting his admiration for Costco's business model, which he described as attracting the richest customers with the cheapest prices while maximizing shared economies of scale. What impressed Munger most was Costco's commitment to its customers and its principled approach to business. The company's famous $1.50 hot dog and soda combo hasn't changed price since 1985, despite rising costs everywhere else. For Munger, Costco represented the perfect long-term holding, a company with an excellent business model, corporate culture, and management team. Stock number 1, Coca-Cola. In 1988, Berkshire Hathaway began buying Coca-Cola shares at around $11 each, with a price-to-earnings ratio below 15. Between 1988 and 1998, that investment grew from $1.299 billion to $13.4 billion, a return exceeding 10 times the initial investment. Munger considered Coca-Cola the quintessential example of a wonderful business, a company with a strong brand, global reach, and enduring appeal. In his 1996 speech, Practical Thought About Practical Thought, he used Coca-Cola as a case study to illustrate how combining strong branding with a universally appealing product could lead to massive success. What made Coca-Cola so special in Munger's eyes? Its straightforward business model aligned perfectly with his philosophy that investors should own businesses that are easy to understand and manage. The company's dividend record is equally impressive. Coca-Cola has announced a 5.2% increase in its quarterly dividend, marking the 63rd consecutive year of dividend increases. The annual dividend is currently set at $2.04 per share. For Munger, Coca-Cola represented everything he looked for in a long-term investment: a simple business model, strong brand, loyal customers, high profit margins, stable growth, global reach, and inflation resistance. Lastly, let's end with a Muchafy bonus tip, this time from Munger. The big money is not in the buying or the selling, but in the waiting. The critical error most dividend investors make is paying too much attention to today's dividend rate while ignoring dividend growth potential. The truly life-changing dividend stocks aren't the ones paying the highest yields today. They're the ones consistently raising their payouts year after year. Think about it this way. A stock paying a 7% dividend today might seem more attractive than one paying 2%. But if that 2% dividend grows by 10% annually, in just 7 years you'll be collecting more income than from the static 7% yield. And after 14 years, your effective yield on cost will exceed 10%, while the high-yield stock still pays just 7%. This is why Munger focused on companies with both the ability and commitment to raise dividends consistently over decades, not just the ones offering the highest initial yields. When evaluating dividend stocks, look beyond the current payout. Ask yourself, does this company have the financial strength, competitive advantages, and management discipline to keep increasing its dividend for the next 10, 20, or even 30 years? That's the question Charlie Munger asked before making any dividend investment. And it's how he built a fortune that lasted nearly a century. If these insights helped you see dividend investing differently today, smash that like button and let me know which of Charlie Munger's favorite stocks you're most interested in adding to your portfolio. Don't forget to subscribe and turn on that notification bell so you never miss our deep dives into the strategies of history's greatest investors. Remember, simplify money, Muchafy wealth, one smart decision at a time.